We had the rand touch 2.5-month lows yesterday. Risk aversion at play on worries about growth in the global economy. We had the IMF adding to that with a stern warning out for emerging and developing economies, saying that if downside risks to the global economy materialize, that there could be even greater challenges facing economies like South Africa. What's your view on the kind of impact that that commentary out of the IMF had on the local unit's performance?
Well, indeed, Alishia, did have quite a significant impact on the currency, but we also saw the markets react quite belatedly to what the US payrolls numbers reflected on Friday and over the holidays. We saw the March payrolls data come in weaker than expected, and at a 5-month a weak 5-month increase at just around 120,000 mark. We also saw emerging market stocks extend their losses and slump to about a 2-year low, while commodity prices also started to feel the pinch. So in combination with the IMF comments, we did see the rand, and very unsurprisingly, also weaken yesterday. And while that may have been exaggerated by the post-holiday trading environment, we do believe that there could possibly be some correction, but we do believe also that the rand will remain on the back foot with regards to the lingering growth concerns coming out of the Eurozone, as well as the IMF expressing concerns about emerging market economies as well. So we are expecting the rand to trade within a fairly narrow range of about 7.93 to about 8.03 during the course of today.
We've had some comment come through that 7.50, 7.60, that's where fair value lies when it comes to the local unit. Are we looking at an oversold rand in your books right now at these current levels, close to that 8 handle?
It could possibly be that we are looking at an oversold rand. And your previous speaker also mentioned that they're not as bearish on the rand as what a lot of houses are. Standard Bank is particularly bearish on the rand currently. We do expect further weakness to come through on the back of the growth concerns that we are seeing coming through from the Eurozone and as you mentioned earlier about the IMF. So we are expecting the rand to weaken during the course of the year and into year end. We are, however, expecting an average of about 8 rand, but we could possibly see the year end at about 8.20.
How do you factor in some of the support factors, Shireen, that are in play though? Because favour does lie, one would assume, for a stronger rand with interest rate differentials sitting where they are, higher interest rates in economies like South Africa relative to developed economies at this stage.
Yes, Alishia, that is a major supporting factor, and we are seeing portfolio flows by non-residents flow very steadily and increasingly into the bond market, which really is an indication that they are searching for yield. They're not so much looking at the good growth story. We are ever seeing that China's GDP data coming out during the end of this week, and if we see a negative not negative growth numbers, but weaker than expected growth numbers, we could possibly see portfolio outflows from the equity markets locally, and that could really temper the currency, and we could see further pressure coming in on the rand.
How do you filter in local economic news? We've got manufacturing figures anticipated today, and that manufacturing output seen up 2% year on year.
We are expecting a weaker number for manufacturing, and then that's really based on the fact that the previous PMI data that we saw for March has slipped from 57.9 points to 55.1 points. And if you look at the detail of that PMI indicators, it's really the employment subcomponent which is dragging that number down, as well as the business activity components of that. And that's really a major concern, that we could possibly see further challenging conditions in the manufacturing sector. So we're not really expecting very good numbers coming out this afternoon, and that again could have negative growth connotations for South Africa and could bring down the rand further today.